Howdy out there, folks. This is Darius Dale here to present our macro minute for Monday, January 3rd, 2022. Happy New Year out there, folks. Starting with markets, stocks up, commodities mix this morning, crypto up, dollar up, global bond yields up, decent little inflation today. With big movers, you got the DAX, Germany's DAX index, the MSCI Emerging Market Index, and WTI all up around 1%. On the economic front, the first batch of December manufacturing PMI data we're generally confirming of our view that the post-Delta bounce in global economic growth petered out in November. So in terms of the countries that we saw accelerating at Korea, Switzerland, and Greece, Germany was unchanged. Its 57.4 reading was tied for the lowest print we've seen since January. And then a bunch of countries ticking down: Indonesia, Ireland, India, Netherlands, Spain, Italy, France, and the Eurozone. The Eurozone's 58 reading was the lowest print we've seen since February 21. With respect to today's probable range setups, overbought signal in WTI crude oil, silver, 10-year nominal Swiss yield, and the 10-year tips break even here in the U.S. Oversold signals in the Bloomberg Dollar Index, currency volatility, and the U.S. dollar versus the Canadian loonie. Taking it to the charts here, put together a few charts here for you this morning. So we have WTI crude oil. It's been bearish FAMs in our signal for a while now. It's at the upper boundary of its probable range, and as you guys know, for those of you who don't know, the probable range process is quantitatively linked to the volatility adjusted momentum signal, whereby you have a fatter left tail if it's bearish and a fatter right tail if it's bullish, and a more even distribution if it's neutral. And so right now, if the WTI crude oil continues to push higher from here, it's suggestive that this signal here might actually flip back to neutral or bullish, which would obviously be very positive for a lot of you. I know a lot of folks are kind of leaning very long crude oil out there still in terms of narrative-based investing land. But anyway, just want to make sure everyone's aware of that. You have the similar signal set up in broader inflation expectations as well. 10-year TIPS break even is actually neutral. Broke back to neutral, so that's something we'll call out as an incremental signal. Looking at the Bitcoin, Ethereum, both are very nascently bearish from a volatility adjusted momentum signal perspective, but who knows if that signal holds if we actually see because what's really what this is all pricing in is that the dollar might actually start to bounce from its lower boundary of its probable range. But if it does not, then see, this is where the game gets hard and gets tricky. If we continue to fade in the dollar, we're obviously going to continue to see a rise in commodity prices and inflation expectations. However, as we just said, a lot of things, WTI and broader inflation expectations in general, are at the upper boundary of the probable range. So if we do see a bounce here, a lot of folks are going to feel a little pain to start the year. So just be aware of that. Might be an opportunity. There might be some option strategies out there to protect against that bi-directional risk. Taking it back to the probable range setups. S&P 500 minus 3 bullish FAMs, minus 3% of downside versus 2.1% of upside. WTI minus 13% of downside, and it's at the upper boundary of its probable range. Bloomberg Dollar Index, as I mentioned, at the lower boundary of its probable range at 1.8% of upside. 10-year Treasury yield bullish FAMs minus 10 basis points of downside versus 12 basis points of upside. Bitcoin bearish FAMs minus 9% of downside versus 7% of upside. Ethereum bearish FAMs for now, minus 10% of downside versus 6% of upside. And then lastly, gold bullish FAMs minus 2% of downside versus 1.7% of upside. So with that, Darius Dale presenting our macro minute for Monday, January 3rd, 2022. Best of luck out there this week, this year. Cheers.